A $3 trillion bank just got licensed to issue digital money. HSBC is about to receive Hong Kong's first stablecoin license, and they're not alone. Meanwhile, XRP Ledger just hit 2.7 million daily payments, a 12-month high, but XRP's price is sitting 62% below its peak. The SEC just voted to greenlight tokenized stocks, and Wall Street built the infrastructure to trade them, but the institutions say, no thanks. Yeah, the financial system is being rebuilt in real time, and nobody agrees on what it should look like. Let's get into it. Okay, so Bloomberg reported yesterday that HSBC and Standard Chartered, two of Hong Kong's three note-issuing banks, are set to receive the city's first stablecoin licenses. And when I say note-issuing banks, I mean these are two of only three banks authorized to literally print Hong Kong dollars, physical banknotes. And now they're about to print digital ones. The Hong Kong Monetary Authority received 36 formal applications under its Stablecoins Ordinance, which took effect August 2025. But they're only approving 3 to 4 in this first batch. Decisions expected around March 24th. And the HKMA deliberately prioritized its note-issuing banks. HSBC with $3 trillion in total assets. Standard Chartered with $870 billion. That's not crypto adoption. That's monetary infrastructure. And Standard Chartered didn't just apply alone. They formed a joint venture with Animoca Brands, the Web3 gaming giant, and HKT, Hong Kong's largest telecom. A 170-year-old bank, a crypto-native gaming company, and a telecom, building a Hong Kong dollar stablecoin together. HSBC? They've enabled $3.5 billion in digitally native bonds through their Orion platform. In 2021, they banned customers from buying MicroStrategy shares. Now they're issuing stablecoins. Complete 180. Zoom out, and this is the global stablecoin race on three fronts. Europe has MiCA. Société Générale already has EURCV live on 4 blockchains. The US has the Genius Act, and now Hong Kong is licensing its biggest banks. And this week, Circle's USDC overtook Tether's USDT in adjusted transaction volume for the first time since 2019. 2.2 trillion versus 1.3 trillion year to date. Skeptics raise a fair point, though. Giving first licenses to incumbent note-issuing banks looks like regulatory capture. 36 applicants and only the banks that already print money get approved? Plus, there's the elephant in the room, Beijing. China maintains a strict crypto ban on the mainland. Hong Kong proceeding despite Beijing's reservations is a political tightrope. But when HSBC gets licensed to issue digital money, the stablecoin conversation just changed. Now from stablecoins in Asia to something that should be the biggest story in crypto, but nobody knows how to interpret it. XRP Ledger just hit a 12-month high of over 2.7 million daily payments, approaching 3 million, up from about 1 million in mid-2025. 170% increase. And the on-chain metrics are exploding. Tokenized assets on XRPL went from 111 million at the start of the year to 1.14 billion, 927% in less than 3 months. XRPL now holds 15% of all global tokenized commodities on-chain. Nearly 27,000 active AMM pools. RLUSD hit 1.56 billion in market cap, on track to hit 2 billion within weeks. And Ripple just deployed Rippled 3.1.2, a critical security patch fixing vulnerabilities that could crash validator nodes. So the network is thriving. Everything is up and to the right, except the price. XRP is at $1.37, down 62% from its 2025 high, down 26% year to date. 60% of holders are underwater. CoinDesk called it, quote, the most important thing happening in XRP right now. 3 structural reasons the activity doesn't move the price. First, XRP is used as a bridge currency for about 3 seconds per cross-border transaction. It generates activity, not sustained demand. Second, RLUSD flows through XRPL without requiring anyone to hold XRP. Ripple's own stablecoin may be cannibalizing XRP's utility. And third, XRPL's DeFi TVL is $47 million on an $84 billion market cap chain. That's 0.06%. Solana is at 20%. Ethereum at 16%. But Evernorth, the NASDAQ-listed XRP treasury firm, is building a treasury plus lending model around XRP. ETF inflows hit 1.44 billion cumulative. And Ripple CTO David Schwartz said, quote, payment infrastructure adoption hinges on usage metrics rather than market perception. The ledger is working. Whether that matters for the token, the market hasn't decided. On March 12th, the SEC's Investor Advisory Committee voted to formally recommend narrow exemptions for blockchain-based stock trading. The committee that steers investor policy at the U.S. securities regulator just said, go. And SEC Chairman Paul Atkins accelerated it. Quote, I expect the Commission to soon consider an innovation exemption to facilitate limited trading of certain tokenized securities. End quote. Not studying it, not exploring it. Soon consider. And this vote happened one day after the SEC and CFTC signed their historic Memorandum of Understanding. For the first time, Bitcoin and Ethereum are officially classified as digital commodities under CFTC jurisdiction. ICO tokens stay with the SEC. Both agencies will coordinate enforcement, share data, and co-lead a joint harmonization initiative. Analysts believe this could unlock multi-asset crypto ETFs, altcoin basket products, as early as Q4 this year. But Commissioner Hester Peirce added context. She said the staff is working on an exemption, quote, much narrower than the committee proposed. And she warned, we do not have the luxury of time. Because anyone can spin up a liquidity pool for equities right now. The SEC isn't ahead of the market, it's chasing it. Even the committee's own recommendation included a warning. The most significant risk is that reforms could introduce new risks that investors do not understand and impose higher costs that outweigh the benefits. The people voting yes are saying proceed with caution, but the timeline is moving. DTCC got its no action letter in December to tokenize Russell 1000 stocks, treasuries, and major ETFs. Pilot launches second half of this year. ICE invested $200 million in OKX to bring tokenized NYSE equities to 120 million users. NASDAQ partnered with Kraken for tokenized stocks launching 2027. The regulatory runway just cleared. And this is the story that ties everything together. CoinDesk published something today that should make everyone pause. The headline: Wall Street pushes tokenized stocks, but institutions aren't eager to trade them. Reed Knock, VP of U.S. Equity Market Structure at TD Securities, put it bluntly. Quote, institutional investors generally do not like instant settlement. No one really wants to be pre-funded, end quote. Here's the problem. The current system settles stock trades 1 business day after execution, T+1. That delay isn't a bug, it's a feature. It lets brokers net positions and manage funding throughout the day. Instant settlement means every trade must be fully funded before execution. No netting. Full pre-funding. At peak moments like market close, the funding pressure could actually increase costs for the biggest players. But the exchanges aren't slowing down. ICE invested $200 million in OKX at a $25 billion valuation, giving 120 million users access to tokenized NYSE equities. NASDAQ partnered with Kraken for one-to-one tokenized stocks with full governance rights, voting, dividends. So who actually uses these products? TD Securities says retail goes first. Retail already accounts for 20% of U.S. equity volume. In meme stocks, over 90%. International investors especially want U.S. market access outside trading hours. Knox prediction: if retail liquidity migrates there, institutions won't have a choice but to participate. But the uncomfortable number: total tokenized equities right now, 963 million, up 2,800% in a year, but still under $1 billion against a traditional market worth tens of trillions. Plus the synthetic equity risk. OpenAI publicly said they did not authorize Robinhood's tokenized version of their shares. The SEC greenlit it. The exchanges built it. But the institutions it was designed for say the settlement model doesn't work. The infrastructure is everywhere. Whether anyone is ready to use it, different question. So look at what happened this week. In Asia, HSBC is getting licensed to issue stablecoins. XRP Ledger hit record activity, but the token captured none of that value. The SEC voted to greenlight tokenized securities. And Wall Street built the platforms, but the institutions say they don't want them. Every one of these stories is about the same thing. The financial system is being rebuilt on new rails, but the builders and the users don't agree on what it should look like. That tension is where the next decade of finance gets decided. If this breakdown helped you see what's being built right now, smash that subscribe button. Drop a comment which story hit hardest, HSBC issuing stablecoins or Wall Street rejecting tokenized stocks. I read every one. See you in the next one.